Hello and welcome back to the channel, my friend. If you're new here, my name is Paul, and you can find me on Twitter or X at PauliDeFi, PauliDeFi. We've had a lot of people reaching out, considering we cover XRP a lot on this channel, and asking what's going to occur or happen next with XRP, considering we did top off at about $3.66 when you look at the wicks or the highs back in July of this year. And since that point in time, we've only seen downward price action with a pretty strong support somewhere in the 285 range, currently sitting at 287, just at a major range low. And although we're starting to trend back to the upside off of that dump to about 270, at the end of the day, people are a bit worried about this downtrend. As you can see, we have a series of lower highs. However, we have yet to truly see a lower low where we saw a bit of resistance here. We've seen support at that resistance once and twice. And if there's anything we know about XRP, is the prior time we saw something like this occur was all the way through the range from December into the breakout for new highs in July of this year. So yes, it was quite a while, but as you can see here, XRP was consistently supported at about $2 with one bear trap or breakdown below the range, which would have been a good dip buying opportunity. And since that point in time, if you zoom out, let's say on that weekly time frame, we are still above our prior all-time high of 2018 and all of the range through December into summer of this year. So although XRP has failed to rally really strong off this breakout, it's important to maintain perspective. A lot of the times we get spoiled because XRP pumps really hard, and even off the breakout highs right here at about 64 to 65 cents, we saw a 420% gain. So an 80% gain really feels like chump change. But at the end of the day, this is a massive move and a gain in virtually any market. Currently, we're sitting up still about 40% from that breakout and very close to a range support between 260 all the way down to 245. So any situation where we break down to 245 is a dip that I would like to buy. Now, other people have been calling for the end of the bull market, considering most people look at a 4-year cycle. And yes, we've deviated from your typical 4-year cycle, but I also think the market has deviated from a typical crypto situation where the majority of cryptos have pumped because of retail investors who simply do not have the same type of capital or access to capital that institutions have. This time, not only do we have backing from the government and most governmental bodies, regulatory agencies, so on and so forth, we also have a lot of institutional backing through the ETFs. And one of the major cryptos by market cap to yet have an ETF is XRP. Again, XRP is the third largest market cap in the world, right behind Bitcoin and Ethereum. So it's extremely unlikely that XRP doesn't get an ETF, if not this year, sometime in 2026, which, by the way, again, would be a deviation away from that typical 4-year cycle. So although history tends to rhyme, it doesn't always repeat. And that's something really important to note. But I believe we're actually not near the top of this bull market, and we could actually see a bull market through 2027. And one person on X said it best. He said, if you compare Bitcoin past bull runs, and yes, we want to look at Bitcoin in order to understand the rest of the market, and I'll prove it to you on the charts here very shortly, this one stands out. In 2017, the rally was retail driven. In other words, it was just people buying anything that moved. And because the markets were far smaller then, it required way less capital to pump the price really hard. But once you start to hit these ranges where you see hundreds of billions or even trillions of dollars in a market, in order for the price of Bitcoin to double, it would need to add another $2+ trillion in market cap. That doesn't mean liquidity, but it's still enough money that it's going to require some major institutions stepping in to pump the price up, or even just keep it propped up in the case of a bear market where things start to sell off. Then in 2021, they brought in a few institutional players. I think in 2021, people started realizing crypto and XRP are not going away. So this provided confidence, but it still wasn't what the market is today. Now in 2025, this has completely shifted as institutions and corporations are leading this cycle. Spot ETF inflows are rising like never before. Yesterday, I even covered that crypto and XRP are some of the fastest growing CME futures contracts in history, which means there truly is demand for these types of assets. Whale wallets are expanding. Corporate treasuries are quietly accumulating. You even have players like Michael Saylor constantly buying. And yes, there's a bit of leverage, but if you look at the liquidation levels, it's virtually impossible for that to occur unless Bitcoin dumps, let's say 85-90%. We have not seen that since like 2013. This is no longer about hype, and it's about structure, strategic accumulation. And so yes, we still have our biggest moves ahead. And so another contributor on X actually shared another really good post on the topic of the 4-year cycle being gone forever, to which I agree. And I think the majority of people who have their head in the game and have consistently followed crypto over the last multiple cycles see the writing on the wall. The 4-year cycle is no longer going to be a thing. And at the end of the day, we are still going to experience a situation where there is an altcoin bull run, an explosion in altcoins, and that usually occurs closer to the end of the cycle when Bitcoin tops off, and then we see a rotation of that capital into your laggards, a lot of these altcoins. Something that maybe didn't perform as well in the beginning of the cycle will then continue to perform well through the very last portion of the cycle. And so in agreement with the last post, including myself, the adoption curve has shifted. 2017, 2021 were retail blow off tops, where in 2021 we saw a bit more acceptance. Then this year, truly, we've seen institutional players enter at record pace. And if you have BlackRock supporting crypto, believe me, the next major play for them is going to be an XRP spot ETF. I just can't see any situation in which XRP doesn't at least see some inflows, if not major inflows from institutions and eventually retirements and pensions through these ETFs, because they're all going to want exposure. And we're talking tens and hundreds of trillions of dollars over the long run, at between at least 2 to 5, sometimes even 10% of all of their capital allocated into crypto. And here's where things get really interesting. Bitcoin supply on exchanges is shrinking, currently at all-time lows, as well as the average coin dormancy has increased, meaning coins are circulating slower, which is indicative of demand and holding versus constantly day trading it. People are buying it, holding it because they see it going way up in the future and being far more valuable than it is right now, which is going to mute our fast 4-year boom and bust swings. And these types of things tend to happen because of hype cycles and retail. You don't see your typical hype cycle when it comes to traditional financial markets. And that's exactly what crypto is becoming today. And so even then, when we see a situation in which retail actually consistently is entering the market, this is how we know this is institutional adoption at play. Cryptos have reached new all-time highs, XRP, Bitcoin, and many other altcoins. Yet retail has not fully entered. And we know this because Coinbase is a really good term. It's the largest crypto exchange in the United States that has more than 50 million users. And Google Trends is easily one of the best indicators to know whether or not the majority of retail investors, just your average person, is downloading the Coinbase app or looking it up on Google in order to enter the market and buy crypto. But by that point, it's usually the top of the market. Here's what's interesting. You can see in December of 2017, at the actual Bitcoin all-time high, hype and searches for Coinbase were also at all-time highs, reaching a 100 reading since 2016. Then at the Pico top in April of 2021, Bitcoin topped. Guess where Coinbase search volume was at? 94. Look at the difference now. Although we are trending and climbing up relative to the tops right over here, we have not seen retail enter to nearly the same degree, looking at a 34 reading for September. In other words, all of the money and capital that has pushed cryptos to these local highs has been institutional and not retail driven. Hence why I don't believe the bull market cycle is over. Now, that said, more often than not, by the end of the year, we see see some blow off tops, but it's very much possible that this thing steady climbs, maybe does some new highs into the end of the year, sees a bit of sell off, and then continues trending to the upside through 2026 and even 2027.